Good afternoon and welcome to the end of week market review for Friday, January 4th, 2013. We've got a couple of things that we're going to be covering today. We're going to be starting things off by taking a look at the market news. While we're looking at the news, we're also going to be including some reports from the economic data. From there, we are going to be looking at the S&P 500 as well as the Toronto Stock Exchange on both the daily and weekly charts. We'll then go ahead and look at the volatility indicator and finish things off by reviewing one of our picks that was put on our watch list this week. So first off, we can see that after a little bit of a wishy-washy week, we ended up with a higher close. Now, this was after the very positive reports that we ended up having after the fiscal cliff was done and dealt with. All in all, the Dow Jones is up 3.97% from last week's close. If you look at the S&P 500, you can see that it's up 4.54% from last week's close. This is showing that we definitely had some good gains, even with a couple of bad days that we had midweek. If we continue to look at the commodities, we can see that oil is up 2.23% from last week. Right now you can see oil at $93.02 per barrel. Silver also moved up 0.77% from last week. It is now at $30.27 per ounce. This was after it made no change for the week prior before that. Gold is only up 0.02% from last week. Currently it's at $1,657.40 per ounce. All in all, this isn't that bad considering the 2 days that has been down over 1%. And finally, if we look at the US-Canadian pair, you can see that it is down 0.95% from last week. It's currently trading at 0.9869 pips. Now, despite the positive outcome from the fiscal cliff, we can see that there was an increase in initial claims. Right now, we can see that we ended up with 372,000 claims as opposed to the forecasted 365. So with there being a little bit more claims than expected, we did see a little bit of a hit in the market there. Alright, what we're going to do now is take a look at the S&P 500 on the daily chart. You're going to notice that we're using 6 months of data, and we can see that the most significant points of support and resistance are 1450 and 1470. Currently, we're finding some resistance at that 1470 mark. If we break up above it, we could end up saying that the S&P 500 is in its 3-month high as well as 6 months high, which would definitely be very bullish, but it would also mean that the S&P 500 is approaching that overbought scenario. If we don't end up finding resistance at 1470, we can expect a pullback where its first level of support is going to be at 1450. The 1450 mark was a psychological mark that's been in place right back to the beginning of September. Now right now the MACD is rising bullish with the black line over top of the blue line. This week it went from declining bearish right up to rising bullish, and that's simply from the incredible gains that we had from after that fiscal cliff. Definitely a great way to start 2013. What we're doing now is looking at the S&P 500 on a weekly chart. Right now we're just looking at 1 year's worth of data. You can see that we've definitely reached some peaks. And if you go back to that 6 month, we're looking at that same resistance that's been in place. Right now it looks like we're definitely up against a clear level of resistance or a clear ceiling. But if you end up expanding things out just a little bit more and taking a look at a 5-year chart, you can see that we're doing incredibly well. And this growth that we've been experiencing has been consistent since the middle of 2009 or 2010. Now, we've definitely had some dips, we've definitely had some pullbacks, we've definitely had some times, just like in 2011, where we had some sharp declines. But since that time, we've definitely been going uphill. And it's easy to talk about the times when things were bad, and definitely things were bad. But things have definitely been good and been very good for the last couple of years. What we see now is a new opportunity to reach new highs, where we could end up seeing the S&P 500 moving beyond 1500. Looking at the TSX on the daily chart, you're going to see that it is also dancing around a support or resistance line. It ended up closing up above, making this a support line, but after dipping back down below it, it became resistance. Today, it's gone right back above it again with this resistance and support at 12,500. What we're expecting is that the TSX is really starting to show a little bit of weakness after a really strong rally and after breaking up above this resistance. But we expect that it is going to pull back, at least for a short period, until it figures itself off and gets its other indicators back to normal. One of these indicators is the MACD. You can see that it's definitely ranging up there with the highest that it's been for quite some time. We can see that this MACD hasn't been this high since before October. Now the MACD is rising bullish with the black line over top of the blue line, which does suggest that the TSX is doing perfectly fine and a little pullback isn't going to hurt anybody. Looking at the TSX on the weekly chart, you're going to see the exact same line that we've mentioned it's been dancing back and forth in. This line goes back to September. If we can break up above this, we'll definitely be in some highs, with the next levels of highs somewhere up around 12,750. So that would be a very tall order to expect to fill. That could certainly happen, but it would take some time in order for it to do so. Now looking at the TSX in the big picture, you can see that the TSX hasn't been doing nearly as well as the S&P 500 has. In fact, it's being pinched in between declining overhead resistance and rising supports. So we need to see the TSX really deciding where it wants to go. Though if we go back to the beginning of May and June, you can see that support has been found and the TSX is starting to trend upwards. We're going to hope that it continues to keep this momentum. Alright, here we're going to take a look at some serious movement. We can see that the volatility indicator is now at 13.80. This means that the volatility indicator has gone down 39.26%. These are huge declines, and definitely some declines that went into our favor. Unfortunately, though, we can't expect that the volatility indicator is going to continue to hold ground like this. We are going to see some volatility increase, where we're going to hope it levels off between 15 and 16. If we look at the volatility indicator back in August and September, and even into October, you'll see that 15 to 16 was its low end when things were doing really good. But we can happily see it ranging between 16 and 17, or even up to 18 without a whole lot of concern. Alright, so we'd like to take an opportunity here to point out one of our picks that ended up doing really well is actually from our basic watch list. We could see that if we used our basic disciplines, or the disciplines that we teach within the My Wealth Accelerator course, we would have decided to purchase this stock at 22.50 on January 2nd. You'd then see that after a couple of days, the stock managed to reach a high of $23.17. All in all, the stock ended up seeing a 2.98% increase. Typically, we go for 1 to 1.5% profit targets, depending on your disciplines. So anybody who was trading would have definitely been able to see those profits, as well as cover any of their trading expenses. So for anybody who got into this trade, congratulations. Now, if you have any questions, whether it's from anything that we've presented today, or if you'd like to discuss any of our other trading options, feel free to email us to training@idealtradinglifestyle.com. You can also call us toll-free at 1-888 942-0266. Just make sure that you're dialing extension number 5. And as always, we are here to help you guys out, but any trading decisions that you ultimately end up making are your own decisions. With that said, make sure that you're always following your stop loss rules and making sure that you're getting out of your positions when you've decided it's the correct time. Don't hold on to things for longer than you know you should. So with that said, have yourself a great rest of your week. Ciao for now.